Testing. Hi there, guys. My name is Rohan Vivit, and today we are going to be talking about how do stock markets work. We're going to be taking briefly how stock markets work. Okay, so in order to know that, let's learn a bit of history. So in the 1600s, there was this trading company over here. Okay, and this trading company was a global trading company that would use ships to trade with valuable items such as gold, pottery, and wheat, and like, I don't know, chili peppers, something like that, okay? So they would trade it all around the world globally. But the funds for that, on the other hand, weren't cheap. They were pretty expensive, okay? So they decided to do a smart idea. They decided to create private citizens of this company, okay? So some private citizens, they will lend them some money, okay? And they will gain any profit back. They will gain any profit back from the company, or a partial profit from, the trading company, okay? And that was technically the very first. This trading company basically was unknowingly the very first stock market. But nowadays it's more complex and stuff, and there are also other competitors on the board as well. But let's simplify it. So let's start with you. You decide to make a coffee shop, okay? And you want to sell up onto the stock market, okay? But how does it actually start? So here's our game plan. First, market for investors. Market for big investors, okay? You're gonna tell them everything about what you're gonna do. Okay, so like this, okay? You're saying to the investors, I'm gonna make a coffee company with good recipes that my aunt made, okay? These are actual good recipes we only get from the best supplies that we personally grow, okay? Well, the best coffee beans that we'll personally grow, or we could just buy from other stuff. But as you hear right now, are you willing to fund it and become an investor for us, okay? And get a stock out of us? And if so, these big investors will invest in you, okay? They also sponsor your IPO, which is your initial public offering, okay? So because of that, you'll start to get a bit popular, okay? So once after that, this puts you on to the public board, and potential other investors that think that, hey, you know what, this coffee shop idea looks pretty good. I'm in. I would like to invest in it. Okay, they might start investing in it, and the more investment they go, the number goes up, and they start investing more, and they start investing more, investing. Okay, and its rate goes up, and more popularity becomes of it. But what do they get? What is a stock in the stock market? Well, a stock is basically you gain half ownership, well, like a very small portion of ownership of the company, just like private citizens. You get some of this valuable stock, okay? And the more well it does, the more valuable it gets as well, okay? So as you see right now, so you just invested in it. Now you partially own it. You gain money back from how good it is doing as well. Okay? And since it is starting to get, because it's getting starting to get more popular, its interest slash value starts to go up, making it even more expensive for new businesses and for people who have been there, who have already bought it already, making their stock even more valuable and more worth it, okay? But but this can also be lost on the other side, and how you can also lose it as well. let's say for some reason some investors think that, hey, this stock idea, let's say one day, okay, you decide what you're just selling some coffees, okay, but unsuspectively one of your employees doesn't look while making the coffee and a rat goes in. You give it to the customer, like, ooh, I'm gonna take a sip of it, a rat pops out, okay, they're like, ah, and they put it on the news. This is starting to look not worth it, okay, it's starting to lose its value. It's not worth it. So some people might sell their stocks and gain money from the selling for that before the stock market, well, loses it. And it's because of this delicate balance that because of that it's moving up and down. But if things are starting to go bad, it could possibly be a big waste of money for the investors as well. That was a lot of money they invested and it did not pay back, okay? And the people who sell it, you mainly get the money for their own personal gains, okay? And that's why the stock market is kind of hard to understand. It's because of this seesaw of supply and demand. Now, many of the sources of that can be from material, such as the coffee beans, the production or the tech for it, such as coffee makers repairing for these and newer models, making it better, and for labor, such as the employees that work. You also have to pay those, right? So it's kind of like this change, okay? And that's why, because of this, the graphs move up and down, because it's because of that, and because of the investors' losses. It looks like your company's going down bad. It's okay though, until it gets valuable again. That's why it's so delicate, because anything random can almost happen. That's why scientists now today are trying to understand more perfectly on more better advice on how stock markets can work, because it could go one day up in value, next day very bad, next day okay in value, okay? It's just random almost at times, okay? Now because of such as this, you don't want to make yourself look bad. And it's because of this, okay? But if you look like that you're actually losing value, then investors are going to continue selling it. And then it's starting to get more badder and badder until you actually lose real value to it. And your stock market crashes, and you just wasted a bunch of money. And all of it was for nothing. All of it. Okay, that's why most high professional stock marketers mainly give advice for long-term plans instead of getting quick cash. Quick cash, just get a few thousands of bucks. Good. Okay, maybe try go for the longer gain. Okay. So that's basically what stock markets are, okay? And oh yeah, I forgot as well. Sorry about that. There's also a bit more to it. Well, actually, there is actually not that much more to it, but there are also other factors as for demand and supply reasoning, such as change of new leaders, and as such new local news as well, and the law, okay? So those are other potential factors for supply and demand, okay? And that's all I have to tell you for now on how the stock market works, and that's basically it. Thank you for watching this video. Hope to see you next time. Bye-bye!